Hey everyone, welcome back to Corporate Decoder, the place where we unravel corporate mysteries. Today we are diving into Wellgistics Health's latest filing, and let me tell you, it's more exciting than trying to understand your doctor's handwriting. We will talk about their recent IPO, what they plan to do with all that cash, and whether this health company is on the path to success or just another flash in the pan. Let's dive in. This is a Form 8K filing. These reports are used to announce big news or events that could be of interest to investors. It is like a company's way of shouting from the rooftops, "Hey, look at this." So what's the big news here? The filing tells us that on February 20, 2025, Wellgistics Health officially entered into an agreement with Craft Capital Management LLC to launch their initial public offering, also known as IPO. An IPO is when a private company offers shares to the public for the first time, raising money to fund their growth. In Wellgistics' case, they offered 888,889 shares of their common stock at a price of $4.50 per share. That gives us a gross proceeds of $4 million. The shares of common stock were offered and sold because of their registration statement on Form S-1, which was originally filed with the Securities and Exchange Commission on July of the previous year, and then amended later. The registration statement was approved by the Commission on February 14. Think of the registration statement as the company's formal application to become publicly traded. A final prospectus describing how the offering was going to be structured was filed with the Commission a week later and is available on their website. A prospectus is a document that gives details about the offering and helps investors make informed decisions. Wellgistics Health stock started trading on the Nasdaq Capital Market on February 21 under the ticker symbol WGRX. Getting listed on a major exchange like Nasdaq is a big step for any company, and it means more visibility and potential investors. After paying for the costs of the IPO, like underwriting discounts and commissions, Wellgistics Health ended up with about $3.1 million. So what does Wellgistics plan to do with all of that money? The company plans to use the money to grow its capitalization, get more financial flexibility, and increase their recognition. They want to make it known that they are now a publicly traded company. They are going to use the money for corporate purposes, including working capital, marketing, and capital expenses. The underwriting agreement includes the normal promises, guarantees, and agreements by Wellgistics. The company and underwriters are protected, including protection from any liabilities under the Securities Act of 1933. In short, this agreement is a set of legally binding promises and protections for both Wellgistics and the underwriters involved in the IPO. Now let's talk about something called Regulation FD disclosure. Regulation FD stands for Fair Disclosure, and the purpose of this rule is to make sure that all investors have access to the same important information at the same time. The company had a press release announcing the pricing of the offering on February 21, and another press release announcing the closing of the offering a few days later. By issuing these press releases, Wellgistics made sure that everyone had access to the same information about the IPO at the same time. The company says that these press releases are not formally filed, so that they cannot be used for Section 18 of the Securities Exchange Act of 1934, nor are they subjected to the liabilities of that section. The information in this Item 8.01, as well as Exhibits 99.1 and 99.2, shall not be deemed incorporated by reference into any filing under the Securities Act or the Exchange Act regardless of any general incorporation language in such filing. Now let's take a closer look at the part of the filing about forward-looking statements. Forward-looking statements are basically predictions about the future. Companies often include these statements in their filings, but they also include a disclaimer warning investors not to rely too much on them. Wellgistics makes forward-looking statements about its projects and financial performance, and use words such as believes, expects, intends, plans, anticipates, hopes, likely, will, and similar expressions. The company warns that real results could be very different because of risks, uncertainties, and other important factors. They mention certain risks could cause the company's actual future results to differ. Wellgistics refers back to their registration statement on Form S-1 for an extensive discussion of these risks. The company says that readers should not rely too much on these forward-looking statements. They also say that they have no duty to update them in the future, even if things change. Now, let's zoom out and take a wider look at Wellgistics Health, they are now a publicly traded company. With the money raised from their IPO, Wellgistics has a chance to make its mark in the healthcare industry. But of course, there are always risks. Wellgistics is operating in a competitive market and faces regulatory uncertainties and may not use the money from the IPO to their advantage. As it is with all companies, the execution is the key to Wellgistics' success. So, is Wellgistics a promising opportunity or a risky bet? The answer, as always, is that it depends. It depends on whether they can execute their plan. With $3.1 million, this company is going to have to work smart. I am curious to see how they will use their money, and if the company is successful, this IPO could be the start of something big for them. What do you think about Wellgistics Health and their IPO? Let us know in the comments below. And don't forget to like, subscribe, and hit that notification bell for more deep dives into the world of corporate filings.